Build your dreams, live rich, and leave
Every
rich.
single day, millions of us see those words flash across our TV screens or on our phones. Sensex and Nifty. You see the numbers, you see the red and the green arrows, but let's be honest, what are we really looking at? What are these giant financial engines that seem to dictate the mood of the entire country? Well, today we're going to pull back the curtain and demystify the two pillars of the Indian economy, the BSE and the NSE. Now, if you're just starting out on your investing journey, I know there's a moment you'll face. It's a wall of confusion that hits almost everyone. You've opened your trading app, you're ready to buy your first share, you type in the name of a big company, and then you're hit with a choice that feels, well, it feels huge. And it leads to the single most common question every new investor asks. And it's a fantastic question, isn't it? It looks like there are two different versions of the exact same stock. Is one of them better? Maybe one is cheaper or safer? It's a critical place to start, and I promise you, by the end of this, you will know the answer with total confidence. But to get there, let's not start with finance. Let's start with a simple story. I want you to forget about stock tickers and financial jargon for just a moment. Let's think about something we all understand: shopping. You see, the easiest way to truly grasp what the BSE and NSE are is to imagine two massive competing supermarkets where you can buy things. Okay, picture this. The Bombay Stock Exchange, the BSE, is like a grand historic bazaar. It's ancient, it's sprawling, it has a rich, deep history. On the other hand, the National Stock Exchange, the NSE, is a brand new, slick digital mega mall. It's modern, incredibly fast, and built for a massive number of transactions. But here's the most important part of the story. Whether you're in that old bazaar or the new mall, they're selling the exact same products. A share of a company is identical no matter which one you buy it from. So, keeping that analogy of the bazaar and the mega mall in your mind, let's dive in and see what these two great markets really are. What's their actual job? At its very heart, a stock exchange is just a marketplace. According to the National Institute of Securities Markets, its sole purpose is to provide a fair, organized platform where buyers and sellers can meet up electronically to trade shares. It makes sure you get a fair price and, crucially, that there's always someone on the other side of the trade. We call that liquidity. And this is where you can really see their different personalities shine through. The BSE, wow, established way back in 1875. It's the oldest exchange in all of Asia. That is our Grand Bazaar, and it has a massive selection, over 5,000 companies listed. Then, in 1992, the NSE comes along as a total digital disruptor. That's our digital mega mall. It was built from the ground up for speed and handles a huge amount of daily trading, which means it has incredibly high liquidity. Now, let's be practical. You can't possibly keep track of 5,000 different companies on the BSE every single day. It'd be impossible to know if the market as a whole is having a good day or a bad day. So to solve this problem, both exchanges came up with a much simpler tool to measure the market's health. The BSE created something called the Sensex. Think of it as a carefully chosen basket. It tracks the performance of just the 30 largest, most established, and financially solid companies listed on the exchange. These are the heavyweights, the titans of Indian industry. And using a very similar logic, the NSE created the Nifty 50. You guessed it. This index tracks the 50 largest and, very importantly, most actively traded stocks on their exchange. So together, the Sensex and the Nifty 50 give us a quick snapshot, a pulse of the entire market's mood. And this quote from the NISM textbook just nails it. An index is a barometer, or think of it as a thermometer for the economy. So when you hear a news anchor say, the market shot up 200 points today, they're simply telling you that the average value of these 30 or 50 giant companies went up. That's it. Okay, so we've established there are two different marketplaces with two different thermometers. But that brings us right back to our original and most crucial question. For you, the individual investor buying a handful of shares, does it actually make a difference which one you choose? The answer, for pretty much every single retail investor out there, is a very clear, very simple no. It really doesn't matter. But to understand why, we need to look at the hidden plumbing that makes the whole system work. So here's the big secret. Your shares, they aren't actually stored at the BSE or the NSE. It doesn't work like that. They all go into one giant central digital vault. Think of it like a single, ultra-secure bank for all shares, which is managed by two organizations called NSDL and CDSL. So a share you buy from the bazaar and a share you buy from the mall end up in the exact same digital locker with your name on it. And on top of that, you have powerful supercomputers watching both markets every millisecond. If a stock is just 1 paisa cheaper on one exchange, they instantly buy it there and sell it on the other. This process is called arbitrage, and it's what guarantees that the prices are virtually identical everywhere all the time. And there you have it. That is the real story of how India's two great markets work. Before we wrap up, let's do a quick rapid-fire round to lock in the key terms we've covered today. First, the stock exchange. Just remember, it's the organized marketplace, the bazaar, or the mall, where all the electronic buying and selling happens. Next up, liquidity. This one's simple. It just means how easily you can buy or sell your shares. Our digital mega mall, the NSE, has tons of activity, so we say it has very high liquidity. Then we have the Sensex. That is the BSE's economic thermometer. It gives us the temperature of India's 30 largest and most well-established companies. And finally, the Nifty 50. This is the NSE's thermometer, and it tracks the top 50 most actively traded large companies in the entire country. So the Grand Bazaar and the Digital Mega Mall are really just two different front doors to the very same warehouse of Indian wealth. You no longer need to worry about which door you should use. The real question is, what will you choose to put in your